Stock market today analysis for Friday, February 10th, 2023. It's Aloha Friday. You're looking at ifsuccess.com. In the description below this video, there's a link to this, or it's pretty easy to remember. You can just put it in your handy dandy internet browser. Go to ifsuccess.com. Download the stuff. Some of this one's pretty short. This one's a little bit longer, but it will help you get a grip on your finances. There's two of these tactics that they're not really directly related to finances. The third one is, so take a look at those. These two are really good for learning how to sell cash secured put options. In fact, there is a video that's going to pop up right here at the 1 minute mark. I put it at 1 minute so it's going to be easy for you to remember. Boom! There it is. 5 reasons why you should sell cash secured put options. When you know why, the how-to is easier to figure out. But I'm going to help you out more with the how-to. In fact, in the same description of this video below, not only is there a link to ifsuccess.com, there's a link to, I think it's trading options for beginners, or option playlist for beginners. Beginners is in all capital letters. That's got 5 different videos in it that will help you with the how-tos of doing it. It'll help you set up stock charts. It'll give you definitions. What's the difference between naked put, cash covered put, show you how to do the wheel strategy. In fact, the 5th video will even show you how to use the Yahoo Finance screener tool for free. And when you use that in combination with the information in here, you should be in a relatively good position to start paper trading, practicing selling cash secured put options on stocks that you wouldn't mind owning, and then move into doing the real thing when you feel ready. Speaking of the real thing, let's look at the real thing that's coming up this week. So this is all financial stuff, financial events that happened in the past week, right? Here at Friday the 10th, and we finished that one up. Had a variety of things going on. Tuesday is probably one that's going to move the markets. At the minimum, people are really going to be waiting to see what happens with this consumer price index month over month, year over year, core CPI month over month. Now, one thing that for my good buddies that watch this video, whether we know each other or not, one thing that I'm going to bring to your awareness, you can choose how you want to, what you want to do with this information, but what I want to bring to your awareness is that that even though numbers don't lie, who inputs the numbers? People, right? Can people lie? That's right, people can lie. So what I want to point out to your attention is that there's two different this is a quarter. It's a coin. I know it's not a very good one, but nonetheless, it is one. This side is the tails. This side is the heads. Most people think there's 2 sides to a coin. It's actually this 3rd side right here. It's an edge. It's right between the tail and the head. And what I'm about to tell you, if you use this properly, you get to stand on the edge, looking at the head, looking at the tails, and making the best decision for yourself with all the information. So what I want to get to you here is that now, even if these numbers, have you ever heard the term cook the books? That's an accounting term for basically numbers that quote unquote don't lie, but people fudge those numbers going in, right? A 5 is a 5. A 5 is a 5 no matter what, right? But what if this 5 is really supposed to be a 6? And I input a 5 instead. The number doesn't lie, does it? But I sure as heck did. So what I want to bring to your attention to see whatever you want to do with it is that these numbers will be released, and even if you realize that it's possible that these numbers are not accurate, the market will move probably in accordance to as if it was accurate, right? Heads and tails, heads and tails. The market moves as if it was accurate, or at least you can assume some people are going to believe this to be accurate. Now, it might be, but it might not be. Right? It might not be. If you dig into financial reporting coming out from the government a couple months down the road, they do a lot of readjusting. Why is that? I don't know. You got to figure that out for yourself. So just kind of keep that in mind, right? I'm not saying disbelieve it. I'm not saying believe it. I'm saying stand in the middle and realize that these numbers might be cooked a bit, but even if they are cooked a bit, the stock market's going to react to them. Most people are not going to try to stand on the edge and look at the head and the tail. They're probably just going to look at one. So take that for whatever you want to use it for. Got some more stuff coming out here on Wednesday. And then instead of the consumer price index, we got the producer price index over here on Thursday. So that's probably going to be some market moving stuff. Speaking of the markets, let's take a quick look at the futures, see what they did. Tomorrow, we're going to be, this Sunday, I'll be posting the weekly chart review. So at the moment, we're just going to look at the daily stuff. Futures VIX went up but came back down. It's a basically inverse of this candle over here. Nothing. It's you got 2 red, 2 green, 1 doji, 1 doji, 1 looking like this, 1 looking like this. This one, if it was totally inversed, we'd have the candle up here. But maybe momentum could be slowing down a bit on that downward side. So we'll see. 10-year treasury yield really took a burst up to the top, right? That's pretty notable, right? It's worth paying attention to. Look at this big candle here. Look at this other candle. Not as wide of a range, but it's still pretty wide. Then you got some slowing momentum. You got a sell-off, but it sells off to about, in the top 10, 15% of this candle right here. The very next candle, boom, prices shoot up from right here's where it closed, here's where it opened, regained all this lost pricing action, regained it in one day. The following day, it opens above this candle, and boom, another wide range candle up. So that's looking like a pretty strong movement to the upside there. Crude oil bumped up a bit and having a hard time getting over that 80. But over the last couple days, sort of similar to what we saw here, what we saw over here. Not exactly, but it's showing some strength in that upward trend at the moment. Natural gas continuing to kind of move sideways, really, and it's not too much of a surprise, right? It can't go too much further. It's already at 2.8, or excuse me, 2.58. Gold kind of moved sideways, dropped down a little bit, moved sideways. So we're kind of in this bottom range right in here. Same thing with silver, but silver is looking a little more downish than sideways. Bitcoin still going to be trading at a sell-off, and actually, you know what? The Bitcoin futures, they're not trading. I forgot. TD Ameritrade, golly gee, they just they won't let their people trade Bitcoin. Either will the state of Hawaii. So go figure. And let's look at what I like to look at is the general markets. We already looked at these three in the futures. The dollar, okay, the dollar has made a bit of a move up. If you look at the last 1 month, 1 day, if you look at the last month, it's up a little bit, but compared to being down here, it's up. It looks at, when you look at the number, it's really not up that much. It's up about 75 cents roughly, I guess. But looks like a pretty big move on those candles though. TLT drop down. Sometimes what happens is TLT kind of gives you an indication of what's happening in the stock market. And your good buddy Brent would love to see the stock market drop down. Not really because I'm a bear, but because I want to buy paper assets at a discount. So I would prefer lower prices than higher prices. 10, 20 years from now, prices can go up, but give me some more time to accumulate. Anyways, so the VIX. See, the VIX had this long wick up to the top, right, and sold off. Right, so this VIX is kind of known as a fear index. It's the volatility index, but kind of known as the fear meter. So by this candle, we see fear was rising, or whatever, volatility was rising, and people looking at the VIX seemed to come down. We closed down to about right here. So got up to 22, but pulled back for whatever reason. And we see the SPX, which is representing about 500 companies, is overall the last 1, 2, 3, 4, 5, 6, 7. Last 7, definitely this trading week, but about the last 7 days, 7 days ago, it hit this high point here and just kind of been selling off. Even though we had an up candle, sold off. And in all of our indices, except for this one, they look pretty similar, right? Not exactly the same, but these three are a lot closer in the way that they look versus this one. And so, but all three of them, Thursday's candle was a pretty big sell-off. And so right now we're in the bottom with the Russell 2000. We're in the bottom, about bottom 10%. How long is it going to take to regain this price action right here? With the NASDAQ, we're below this candle. How long is it going to take? Right, the faster it goes up, that shows us the more powerful it is to the bull side. The longer it takes to get up back to this point, the longer it takes, it's showing us the weaker amount to the bull side. And if it keeps selling off, then we know it's it's real weak. Over on our Dow Jones, we're like a little bit under this 50% mark when you're looking at the body of this candle. So that's still got some work to do, but this is the most, for as far as 1 day candle, the most bullish looking one. And this would be the second most bullish looking one, where we're about, I don't know, what is that, 25%, something like that, 30%, somewhere in there. But we're still definitely in the bottom 50%. So let's see how next week shakes out. But I wouldn't be surprised. Honestly, I wouldn't be surprised if it goes up or down. Let's look at these different sectors. So gap down just a little bit on the open, at least a little bit below where this candle closed, and rallied up to close a little bit below where this candle closed. And it really seems like it just kind of broke that little trend. Trend lines, they're subjective. Where do you draw them at? And look at my trend lines; they're not even straight. So, but that's what I'm getting out of that. Right, and that doesn't mean that it couldn't go up again. But here we had this pivot point right here, right there, drop down to that point again. So what's it going to do? Is it going to pivot up or not? We'll find out. Healthcare, even though this is a pretty wide range candle, it's inside of the body of this one, but we're closed at the in the top 50%, but also, we're still under this kind of trend line. When I first looked at this before I made this video, and I was just looking through the market action, I'm noticing, what I noticed right away is potentially is it building a little bit of a floor there? Maybe. Now, if prices keep getting pushed to the downside, but the floor keeps going this way, then sometimes what happens is it'll break down. It's kind of like you've got a spring, these springs getting compressed, and they're being pushed from this side, and to relieve the pressure, they end up breaking to this side. That doesn't always happen. A couple months ago, we saw it happen. It's a couple weeks ago, months ago, I don't know. We saw it happen in gold. We saw it setting up to happen in silver, but it didn't happen in silver. But that's why it's like you're, from my standpoint, a lot of what trading and investing is, you're just trying to make the best decision with incomplete information, and you're just going on probabilities. I don't know if there's ever any certainties. I guess there's one certainty, the passage of time, right? If you sell an option or if you buy an option, you can guarantee that 24 hours later, there's going to be a new day. And then 7 days later, there's going to be a new week. And about 30 days later, there's going to be a new month. And about 365 days later, there's going to be a new year. And you can always guarantee that there's a little bit of value of that option is being eroded away with every day that passes by. You might not see it in the price, depending on what volatility is doing, depending on the movement of the stock, but the time portion, the theta portion that makes up some value of the option, that's getting eaten away every day. Financials. Financials, we closed up here. So another reason why, why I was saying that the trend lines are a little bit subjective is that, I don't know, where do you draw the trend line at? Did it break the trend? Is it from this point to where? Is it still in that trend? Kind of depending on where you draw it. And I don't know what the be all do all is with that. But what I'm noticing, right? I'm noticing we had a bit of a pivot right in here. We're getting close to this 36. It did get, relatively close to touching that 36. Didn't do it. And this 36 seems to be, when it's below 36, it's acting as some resistance right here. And when it finally, and showing some resistance right here too. When it finally got above 36, it seems to be acting as some support. So it seems to be acting as some support. But, again, we're just looking at the 1 month daily. So this is, it's not a conclusive trend, a conclusive short-term 1 month trend maybe, but as far as like this bigger picture, and when you're looking at stock charts, eventually you really need to be looking at a bigger picture to get an idea what's that big wave doing, right? Because if you think about a tsunami, right? There's this huge wave coming in, but on top of that huge wave, there's a lot of little smaller waves, right? Little ripples and things like that. So it's kind of like this wave within a wave within a wave. And when you know what that bigger wave is doing, then you can wait till that medium wave is in alignment with that big wave, and then when your small wave is in alignment with those two, you're going to have a powerful move, potentially have a powerful move to whatever direction all those three are in alignment with. But nonetheless, we got this pivot right here. We got a bit of a pivot right here, pulling back to about the 36. It's going to be... I'm excited to see what happens going into next week. Industrials, a little more than sideways, right? Here's roughly, it's like it's kind of you could say let's do it this way. This is almost pretty close to sideways, right? If you look at where it opened here, where it closed here, where it opened here, it's just up just a little bit. And maybe that means something. To me, I like to look at this kind of overall bigger picture versus just where is the price action. That is relevant. What's the price action look like? Pretty volatile. All right, this one's a little, I guess, less volatile as far as up and down. We got a lot of volatility here in healthcare. That's an up and down in here, smaller move up and down here. But there's some pretty wide range candles here in both the up and down direction with the basic materials, and prices almost sideways there. This communications dropped down. Look at that. Even though this wasn't much of a wide move, and we got some decreasing volume over the last 3 days. It was a big drop down, but volume slowing down just a little bit. So maybe the momentum's slowing down. Think about sprinting. You know, when you sprint, if you sprint full on with 100% of your energy, at some point you need to slow down. You cannot sprint indefinitely, right? You don't sprint a marathon, right? You when you're running longer distances at a different pace. But in a marathon, even if you're doing a marathon, you can sprint for certain sections of it, right? But at some point you have to slow down. So if this movement is going to continue to the downside, which it might, it would make a little bit of sense that after kind of a big move, it slows down just a little bit. And we're getting in here to this seemingly some support resistance area, just kind of coinciding with this 200-day moving average. So things could be slowing down just a little bit in there. This is another one that will be interesting to see how it plays out next week. Energy, on the other hand, woo, look at that. Pivoted right here, pivoted here, pivoted here. So the distance between these two pivots, shorter. Look at that. Little, ooh, that is not a good, it's not a good W I'm trying to draw. How we got this W pattern here, right? So we got left hand side significantly lower than the right hand side. And with this candle today, we see this part of the W right there where it pivoted down, really broke through that. Now it's here in this 90-ish area, just hitting some support. But like day trading, if you would have been day trading XLE today, well, let me rephrase that. If I would have been day trading XLE today, this would have been an indication to me, right? Oh, I see this. I see we got this kind of W going on. I see where it opens up. I see it breaking through here. I probably put something on as a long. And would I ride it all the way up to 90? You know, yeah, my big fish story says yes, but my reality, just to be honest with you, I probably wouldn't. I'd probably, depending on how many shares I had, I'd probably close it out as, you know, if I had 100 shares, could I get 20 cents out of that? $200, something like that. You know, that'd be good. It all depends on, you know, what's going on. But the reality is, your good buddy Brent isn't day trading. At least I wasn't today. Sometimes I do, but it's like few and far between. Most of the time, I'm swing trading some options, and I'm just selling those options for the most part. I'll do some other stuff here or there, but I definitely didn't do that. But that would have been one I was looking at. And speaking of which, if you're relatively new, you know, you're gonna there's like thousands and thousands of stocks out, right? There's so many different stocks. And then pick one that you really want to pay attention to, especially in the beginning. Just pick one, whether it's an ETF, a stock. I would recommend pick a stock that you potentially want to own, but pick it and learn that personality. Start watching for patterns and things like that. If you're looking at 12 stocks all the time, it's hard to find one pattern. But when you're only looking at one stock, it's pretty easy to find. And then when you get used to looking at that one stock, if you feel like it, add another. Then just keep it limited. If you keep it limited as a beginner, if you keep it limited to like 1 to 3, as far as to get good at recognizing patterns and get better at reading charts, you limit it to 3, and you just really focused it on those 3. Yeah, things are going to start clicking for you a lot faster. Over here on consumer discretionary, we had a bit of a pullback. It's kind of riding this 200-day moving average, and let's see how that goes. Over here, right, we talked about how quick the prices get back up to the top. So consumer staples and also utilities. These are kind of seen as defensive sectors of the market. So if the market is, people are getting kind of nervous in the market, they might take money from like this tech sector and they might put it into what they view as more defensive. But one thing, since we're talking about that, just sort of for general financial literacy reasons, you want to realize that whether you have all your eggs in this basket, or whether you have your eggs diversified in the speculative tech sector, and you got some eggs in, and I hope you know when I'm referring to eggs. I'm not literally talking about eggs. I'm talking about your cash or whatever currency you trade in. But maybe you got some eggs over here. You got some eggs over here. Maybe you put some eggs in here. You put some eggs over here. Make sure you hit those financials. You're in there. Your healthcare. Hey, people always gonna need healthcare, right? Building basic materials. You're in there. You figure like, I don't need these communications. I got the tech over here. Get some industrials, and you're overall like, wow, I'm diversified. I'm diversified. It depends. It depends. Are you diversified? Depends. What's your definition of diversity? I'm talking about financial diversity. Well, if you're talking about being diverse through different sectors, yeah, you're diverse. But you're not diverse from I don't know how to spell this properly, but systemic risk. You're not diverse from that. What is systemic risk? What is that? It's if systemic risk, you're going to fall victim to systemic risk when the entire stock market moves down. Because guess what's going to happen to all these sectors when the stock market moves down? Take a wild guess what happens to all these sectors. That's right. They move down. For example, there we go. For example, all 2022, systemic risk right there. Which sectors moved up? Which sectors moved up? Let's go over here. Which sectors moved up? Let's do this. We'll bring this out to 1 year. One year was the high, and now here's the end of 2022. Lower. How about XLP, consumer staples? So we started 2022. All right, so this where is our 2000 ending 2022? Almost sideways for that, but ended that way. Well, look, it was pretty volatile all the way up here, all the way up down. So I guess this is why they would say they look at this as defensive, is when you're what's that? What's XL? It's okay. Did we look at that one? No, we didn't. So here, started here, ended down. How about XLY, consumer discretionary? Right down. So generally speaking, when the stock market tanks, you're just, that's what's happening. The stock market's tanking, and that's systemic risk. So if you really want to be diversified, you want true diversity, you got to figure out some other asset classes to put your money in, right? Because this is one asset class. What other asset classes are there? Okay, there's paper assets, right? Futures. You could look at it that way. You could say, hey, well, what if I'm in crypto market? What if I'm in the stock market? What if I'm in the futures market? What if I'm in the currency market? Okay, well, that's like That's some diversity when it comes to different paper assets. And then you could have even more level of diversity. You could have money in paper assets, whichever ones you like. You could have money in real estate. You could have money in physical commodities. You could have money in art. You could have money in business. Right? That's very, very diverse. It depends on what your funds are. It depends on what your skill set is and all these different type of things. So I want to get caught up too much in the weeds with that unless you're ready to go into those weeds. I was just throwing that out there for some general, financial literacy. Where when people talk about diversity, there's different levels of diversifying your assets, and want to be clear on at least your definitions. Other people that get on TV and talk about whatever they get on YouTube and talk about whatever. You might not know what their definitions are, but be clear on your definitions and just understand that when people talk about diversifying your portfolio, there's multiple ways to do that. In some ways of diversifying is much more diverse than others. So with that, I think that's a good time to close it off. What do we think? What do we see going on? Who am I talking about? We. I don't know what you see. What do I see? What's going on? And I'll tell you what. Unfortunately, there's no royal we when it comes to your good buddy Brent. Just a peasant over here, just like a lot of other people. But just a peasant trying to make the most out of it. So what do we got going on? Right, pull back. We want to see how far is it going to pull back. So as I said in yesterday's video, it's not really surprising because we got a pivot point here, got a pivot point here, we got a pivot point here, we got a pivot point here. It's like, in this range, we've seen the market pivot in the last 6 months or whatever, however long that has been. So that's not a surprise. Now, is this a W? It looks like a W, right? You see that? Changes to yellow. Looks like we got a W. All right, pulled back a little bit. It definitely broke that little spot right here. But is it making, so we got one W. Is it making another one? Is it like here? Oh, pull back. Here, I don't know. My W is not looking too good. So what's going on? Not sure. It looks like it could. I wouldn't be surprised if we see it go up next week. That wouldn't be too much of a surprise because we got a low, higher low, higher low. That wouldn't be too much of a surprise. Then for me, what I'm looking to see is what's going to happen around this 420 area, 420 to 440. Now, if it can't get above the 420, then I'm not concerned about the 420. It's got to get past 420. Right now, it pulled back. Does that mean what does that mean? It just means it pulled back, right? To me, that's all it means. And speaking of a pullback, look where it pulled back. It pulled back basically right here. So, if this is going to come in, if this area is going to act as support for this, then we could see it coming up here. Now, let's say if it kind of blasts through 420 like butter, that's going to give a different message than if it has a difficult time getting through the 420. Right? So the strength that it gets through the 420, assuming it gets through the 420, if it cannot get through the 420, that's giving us a different message too. And it'll also give us a different message if it pulls back. It's what's that, 408 right now, right? We're further away from 420 than we are from 400. So if it closed at is that where it closed? Yeah, 408. Boy, it looks pretty close. I'm just looking at this though. Well, yeah, we're a little bit further away, right? We're like about $12 away from 420. We're only $8 away from. So it's kind of in the middle. I mean, gosh, we're just kind of splitting hairs. I guess it's kind of in the middle, or it's not like it's at 405, right? But still, it's a little closer to the 400. So let's see, if it doesn't even get close to 400, if it's going to be kind of catching support right here in the 408, whatever, 407, 405, then that's going to tell us something too. And then from there, like, I don't know what you're going to do. I don't know what you're going to do. That is a guarantee. That is one thing I can guarantee you out of this video, is I have no idea what you're going to do. I know what I'm going to do. I don't know what you're going to do. What I'm going to do is at the moment, I'm still of the mindset that we're in a sideways, we're trending sideways, right? And as I was talking about, how I see it handle this 420-ish to 440, or the lack of handling it, is going to reveal to me whether we're going to stay in a sideways market, or whether we're going to go more into an up market. All right, if it slices through the 420 like butter, and it starts pushing past the up to the 440 like butter, and it's seemingly going past the 440 like butter, then I'm going to be, if it does that, then one change I'm going to make is I am going to start selling a lot more cash secured put options on stocks I want to do the wheel strategy on. What is the wheel strategy? Look in the description of this video below. It's going to be explained in that option playlist for beginners. But I will start. There are certain stocks that when the stock market's dropping down, I tend to try to accumulate stocks that I want to own for a long term. And when the stock market's kind of moving up, there's certain stocks that I don't really want to own for the long term. I would be okay owning them for the long term, but they do not have the financial statements that I feel like yeah, this company has strong financials. But there's something about them, like maybe the company has a really rich option premium. Maybe the company is really volatile. Maybe the company is kind of like a cult stock. Like, even though it's not necessarily a really lucrative company, for some reason, a lot of people just really like the stock, even if they, kind of dislike it. Like, I never really looked at I haven't looked at the financials of Tesla, but Tesla would definitely fall in the cult stock thing. What is Tesla? I don't even know what the flippin' ticker symbol is for Tesla. Oh my good lord. I can't believe that. I can figure it out. TSLA. Right? TSLA. Cult stock, man. People love or hate this stock. Alright, so what do we know about it here? Doesn't give a dividend. We see it's in consumer discretionary. Finbox is giving it great financial health. Well, that's pretty good. It's trading at a high price to book multiple. Strong return over the last month. Okay, that's great. That's more to do with price action movement. Its current price closed at 196.89. Out of these Finbox fair value average, coming from these different 12 models here, right? Coming up with a fair value model for all these different 12 different fair value price. The average of these is 213.94. What's the lowest? Okay, 188 seems to be the lowest. Now, because this doesn't give dividends, maybe this would be a stock that I would consider for the more of a wheel strategy, because I am partial to dividends. What else can we quickly figure out about this? Let's take a look at this. All right, free cash flow. That's good. After they pay their bills, they got some cash flow. Let's take a look over here at enterprise value to EBITDA. Ooh boy. Ooh, you know what this is telling us? Enterprise value to EBITDA. Can you see that? How well can you see that? Let me see if I can zoom. How do I zoom in? That's not zooming in. Oh man. I don't know how to easily. There used to be this way to zoom in, but I guess I don't know how to do that anymore. But anyways, here we are, 34.8. Right? I like to look if I'm going to be buying stocks for like a longer term buy and hold. I was taught to look for this to be 10 or under. And the other, we got the EV to EBITDA benchmarks for basically what is this? Competitors. I guess these are all kind of electronic vehicles. Got some negative ones here. That doesn't seem too good. Consumer discretionary. Average enterprise value to EBITDA is about 1.8. So Tesla's looking pretty expensive. When you look at it, it's like how much money the company makes versus how much the stock is currently trading for. That doesn't mean it's not a good trade, but as far as like if you like buying your shoes at a discount, this would not be buying Tesla at a discount. I'd say the minimum you probably want to get Tesla at what was it? About 188. It's something that we can look at this basic earnings growth. All right, that's pretty good, right? That is good. 115. Let's look at revenue growth. Revenue growth, that's good. So we got earnings per share growing over 50%, revenue growing a little bit over 50%. Looking at some of its competitors, Phoenix Motor Company. Let's check out Phoenix real quick. Woo boy, look at right there. All right, see that? We'll go back to Tesla. Phoenix might have holds more cash than debt on its balance sheet. That's good. At least it's got something good going for it. And what else could we look at? Tesla. Let's go back over to where are you at, Tesla? There, I think we get it right here. And let's see, down here to 85. Oh, let's do this. Let's look at the old. Where's the Ben Graham number? Ben Graham formula. All right, look at this. Okay, good buddy Ben Graham, Warren Buffett's original mentor, using his formula. You wouldn't be buying the stock. You'd want to get, well, you would be. You wouldn't be buying it right now, but you'd want to get it around $44 based on this Ben Graham formula, which I like to look at. What else? Dividend yield, we already know. What's the PEG ratio? Price to earnings of growth. All right, that's pretty good. That's good. It's kind of a mixed bag. This one really wouldn't. I don't know. Looks pretty good. How much debt to total capital? That's pretty good too. What's debt to total capital? Yeah. And then let's say you wanted to get a hold of Tesla. Take a look at that. Just do a real quick. All right. So we see Tesla hit a low right here. Obviously, yeah, that would have been a place to buy it, right? If you're looking at that Finbox was saying that 188. You're right. You're right in right around there. Could have got a good deal. Let's look at the 160. Could you sell a put option at 160? And let's look at 100. It seems like that would be good. Now, keep in mind when you're doing this, it's bringing you open to buy 100 shares. So you'd basically be committing to purchase $10,000 worth of Tesla or $16,000 worth of Tesla, 100 shares. Now these contracts, these are over. That's why it's 0. You could have looked at that today, but going out 1 week, $100, not much, right? You could do it. There's people that have definitely, there's a lot of liquidity in this contract, but you might be able to get like $4 before earnings. Now, does that mean you shouldn't do this? Now, if you have $10,000 in your account and you want 100 shares of Tesla and you like this price, let me rephrase this. If I had an extra $10,000 in my account and I wanted 100 shares of Tesla and I liked the idea of buying it at 100, regardless if it dropped down to 80 or 90, if I thought 100 is a good deal for the long term, then I would place an order to see if I can get filled at $4. Not because I'm so much wanting this $4, because I'm wanting to buy at 100. And that's a steep discount, right? This is a guarantee that I'm getting it at 100 if it drops below 100, and also gives me just like a little more money in my account. But what about 160? Here we are. Look at there, 160. You're looking at as just doing, they call it like maybe poor man's delta, or poor man's probability or something like that. I don't know what they call it. I just heard it somewhere called poor man's. I don't really like that idea of poor man's, but it's just, this is not a real accurate. Delta is kind of an inaccurate way of looking at the probability of it expiring in the money, but it's better than not looking at anything. So it looks like roughly around a 3% chance that if you sold a put option on Tesla that you'd be assigned, right? 3% chance. That's a very low probability. If you wanted it to expire worthless, you're looking at a high probability trade. It's very liquid, right? You had almost 16,000 contracts traded today. The highest it traded for is 61. Lowest it traded for is 28. Currently, you're getting around 30. And so, if I wanted to potentially get filled at this price, then I'd put a contract in for this too. Let's look at that 188. Close to 188, 187 and a half, 185. Now you're looking at taking in some bigger money, right? Instead of $30, $60, you're taking in $300 here, roughly around in there. But you got a higher probability of assignment. Now you're looking at about a 27% chance of getting assigned. But I don't know. If I would, this is a with this dollar amount, I generally don't do the wheel strategy with, but if I did, this is all right. This stock seems all right to me, because even though there's things I don't like about it on the financial statement side, it's definitely, there's definitely worse stocks than this. This is pretty decent. There's a fair value. I'm saying fair value is 213. That's what it isn't that what it closed at today? I guess maybe, I don't know what you're talking about with that. I'm looking for excuse me. Levered free cash flow. I think we already saw. Well, let me look at the debt to common equity. That's pretty low. This is pretty good. Yeah, maybe I'll have to look more into Tesla. See what price I can potentially get it at. Anyways, that's a way to kind of look at stuff. We really went off the beaten path. I thought this video was going to be a lot shorter. Hopefully you had fun, and I definitely learned some stuff. So I hope it was as good for you as it was for me. Aloha.